What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about the theory of trading structure. It's a working title, I think, right now, because we may also have a title, something in the lines of, the theory of trading any type of structure in the market. So we don't know what the title is going to be, but stay tuned and you're going to find out what we're going to talk about. Also, if you guys are new to this channel, please subscribe to the channel because we always offer free content for you guys. If you're new to this channel, please subscribe to this channel because we always give out free content every single week. So without any further ado, let's begin. All right, so I don't know if a lot of you out there are struggling with structure and struggling in terms of identifying the structure correctly, but I want to help you guys and simplify it here in this video because I think it's important and vital for you guys to trade it and to know how to trade it, only because structure is king, right? And I've mentioned this before in my other videos, but in this way, in this video, I really want to show you the theory behind structure, okay? The theory that you can trade just about any kind of structure that you see in the market. Now, when I say any, I mean any kind of structure. That doesn't necessarily mean just the 4 hour or the 1 hour, the 15 minute or the 1 minute or the 5 second. That means everything, right? And that also means how we are able to define and look at structure correctly in the market. Because a lot of you guys have the tendency of seeing structure in this way, right? Let me just show you guys how it's done. Okay, so there's this example where prices are breaking, retesting, breaking, retesting, and breaking and retesting, right? So that's one way, a form of doing it, right? And that's a lot of the retail traders, the way they trade in this form, right? But then there's also the smart money concept way of trading, which is break and then mitigation, break, mitigation, break, and mitigation, okay? Now, structure is essentially just where price breaks a high or a low, right? So prices are breaking a high, then prices are breaking a low like this, okay? That's considered to be what is known as structure, okay? But I'm really going to talk to you about, guys, how you guys will be able to trade anything and everything in the market just as long as you know what points of structure you're in the markets. Okay, so I'm going to draw a diagram right now just to show you guys how we define structure in the markets, okay? So first things first, all right, we have what's called the major structure, okay? And inside the major structure, we have what's called the sub and minor structure. Substructure goes bearish like this, okay? And minor structure goes bullish all the time, okay? Just like this, all right? And anything inside the minor and substructure is considered to be microstructure, okay? That is the three forms and the three types of structure that we see in the market all the time, okay? So if you know how to trade all this and how to actually identify this correctly, okay, if you know how to identify all the structure correctly, you will then be able to know what parts of structure you're in and you're able to trade, okay? This is how we trade a lot of the times, all the time, pretty much, okay? So for example, if let's say this swing here, this area went bullish like this, we would consider this as our 4 hour time frame. Okay, let me just put this down here so you guys can see what I'm talking about correctly here. Okay, so this would be our 4 hour time frame. Okay, and then anything that the retracement that is happening here, okay, this would be our 15-minute time frame, TMF. Okay. And then anything that is smaller than the 15-minute time frame, which we would be considering as the 1 minute, right here, pretty much 1 minute TMF, right? This would be our 1 minute time frame. Okay. So if I was to say, okay, my daily routine would be, okay, let's go on the 4 hour first, right? We'll go on the 4 hour and we see what the market is doing structurally on the 4 hour. Okay. When I first start and look at the markets first, I always start basing off the markets off of structure first, okay, not direction. I'll tell you why. I'll tell you why in a few minutes after this, okay. But the reason why we start with structure first is because we want to know where the market has been structurally, okay, in the past, and what it's happening right now, okay, in present time, okay. And once we identify what's happening present time, we can now start to hypothesize, excuse me. We're going to starting to scale down to the lower time frames to finally see where that 15-minute structure is within the 4 hour lows and within the 4 hour lows and 4 hour highs, okay? So once we find out what the 4 hour is doing, something, let's just say something like this, right? Something like that. If the 4 hour has made a break of structure like this, Now we understand when prices are retracing, we're trading the retracement of the 4 hour, okay? So you can see when price is going bearish on the 50-minute, prices are showing structure, right? They're all showing structure. Okay, so I would tell myself, okay, well, we're trading the retracement, right? And what we're doing here is we're only trading the retracement, which means if we're trading the retracement, there's a higher possibility that retracement may not retrace all the way back or fully, right? So therefore, we're only going to be looking to target the lows of the retracement here, right? Just for a safety precaution, because we don't know if prices are going to fully retrace and then extend, right? For all we know, prices could just retrace part of the way and then push bullish like this, right? Because we know that the markets don't have to mitigate, right? And the reason why they don't have to mitigate because it's the banks. The banks don't have to mitigate a certain position if they don't want to. Okay, so, and what do I mean by that? Okay, so when prices are retracing, let's say the market here hasn't fully retraced here. Okay, let's say the market just retraced here and stopped here, right? Just right above this high here, right? Well, the reason why they haven't retraced yet all the way fully back here down to this area of demand is because the banks have an idea of where they're going, right? They're going to come there eventually and mitigate that position and/or create liquidity, something like this, where price comes down, creates liquidity like this, right? Comes up and then it goes bearish like this. Now it created liquidity, right? And faked you out to tell you that prices are going bullish, but rather they're going bearish, right? But this is something on another topic that we'll talk about later, okay? But I just want you to see this very vividly again. When we're trading the 4 hour, we know the 4 hours has broken a high like this. When prices are retracing, we know that will be the 15-minute time frame, and we have to see that the 15-minute time frame is in fact breaking structure and that it's giving us order flow. Order flow is at least 2 or more break of structures to show that prices are indeed bearish here, and therefore we're looking for prices to continue going bearish because the order flow is present at this point in time, right? So obviously when prices fully retrace here, we understand that this is the 15-minute mitigating the 4 hour low here. Therefore, the 15-minute has to switch now, okay? This is the 15-minute switching here. Prices are breaking new high, right? Coming to mitigate. We see this chalk. Now we have to see that the 15-minute needs to come and mitigate a low, right? It could either be a flip or the extreme, which we'll talk about in another video, right? And once that happens, now we need to see the order flow change. We need to see structure change on the 1 minute time frame, sort of in here, okay? And we need to see that 1 minute change to show us that the structure is going bullish and that the order flow has deemed on going bullish here. Once we see that 1 minute has shown us that structure is going bullish here, we can look for prices to enter here on the 1 minute, and then to look to continue prices higher, right, like this, right, and target the high, right? But let's go back into the topic of what this video is about, okay? So let's just say that when we're looking at this chart fresh, right? We don't know what the market's doing right now, right? But what we're seeing is we see the 4 hour low, we see the 4 hour high here. We put a break of structure like this, okay? And here's where everything's going to start making sense for you all, okay? When we have something like this, right? And now we're looking at everything fresh. What is actually happening here, okay? We want to know that since the since the 4 hour low here has broken this high, where will our next retracement be, right? That will be all the way down here to the next deep retracement, which is down here, because more times than not, prices don't mitigate down at this low. And so theoretically speaking here, if the 4 hour retraced, right, all the way down here at the area where it's unmitigated, right, in theory, prices should actually push bullish here, okay, because this is essentially the last previous low, the 4 hour low, and prices should push bullish here, right? But let's look at this now, okay? Now that we're talking about the 4 hour lows and the 4 hour highs, I want to talk to you about now the 15-minute, okay? We can see that the 15-minute is pushing bullish here. You can see that 15 minutes are going higher here, okay? This is the minor structure pushing bullish, okay? You can see that the minor structure here has respected this low right down there, okay? And now you can see that prices broke the 15-minute high, right? Now, theoretically speaking, prices should retrace here at an area of demand here on the 15-minute and then push higher, okay? So you see what I just did right there? What we're doing is we're following and we're focusing on our three different types of structures, right? We're seeing the major low, the major high on the 4 hour, right? And then now we're seeing the internal structure of that 4 hour, and we're seeing it in terms of substructure and minor structure, how it's reacting inside here, or it's actually the external structure in here. Okay, we're seeing how the retracement has happened on the substructure and minor structure is pushing bullish. So this theoretically makes sense because now we know if prices are pushing bullish on the minor structure, then theoretically speaking that we should be looking for buys, right? We should look for a complete break, wait for prices to retrace, wait for price to break again, wait for a retracement, and continue this theory on and off, right? I mean, not on and off, excuse me, on and on. So theoretically speaking, like I mentioned here, you can see how there was that low, the 15-minute low, 15-minute high, prices retraced, respected this low, and pushed bullish again, right? Now we have to follow that theory on the 15-minute, right, on the 15-minute low. There's that low again, right? Price retraced, respected the low, and pushes bullish here, okay? So this can continue on and on and on like this. There's another break, right? Another retracement, another break, another retracement, right? This can continue going on and on like this. Another break, another retracement like this, right? And continue like this, right? Until prices on the 4 hour decides to go bearish like this, to go all the way down to your unmitigated area of demand for the 4 hour, right? And you can see now that the 15-minute has been going bullish here, right? The minor structure. Let's do this a little bit better though. Once prices are going bearish like this, you can see now we have the first break of structure to the downside. But just because we have one break of structure doesn't define that prices should be going bearish, right? More importantly, we'd like to see two breaks of structures here because that defines a trend a trend pretty much for us to look for trades. Okay, so once we get those two breaks of structures right over here from the substructure coming bearish here like this, right, we can expect price to come and drop all the way down to the area of demand right over here for the 4 hour demand, okay? But let's talk about the 1 minute time frame, okay? What if the 1 minute time frame, what if you're a scalper, right, and you just wanted to use the 1 minute time frame and go ahead and enter on the 5 seconds time frame, right, like which we do, okay? What we generally do is we look at where the 15-minute time frame is, right? We look at the 15-minute time frame as our higher time frame, and then we start to see where structure has been broken on the 15-minute time frame, and then we drop down to the 1 minute time frame, and then we look at what the order flow on the 1 minute time frame, and then we look to buy and sell on the 5 seconds, right? We're looking at the 5 seconds as our entry time frame. Okay, so let's just say we were on our 15-minute time frame here. We're not focusing on the 4 hour time frame. We're just looking at the 15-minute bullish here, right? And as you can see here, since I'm a scalper a lot of the times, right, I can see that price was going bullish here, and now it's going bearish here, coming to an area of demand here on the 15-minute, right? Now I can say to myself, okay, well, I need to wait for prices to break a new high like this. This would be the 1 minute right over here, right? 1 minute going bearish, 1 minute going bullish right in here, okay? This is all that internal structure, okay? So what I would need to wait for and see here is order flow pushing bearish, right? So what we need to see is that 1 minute high broken like this, right? This would tell me that the 1 minute has been broken, right? We saw that the 15-minute has been respected like this, and then the 1 minute has broken. Now I can look for prices to go bullish here from the 1 minute, right? Wait for price to retrace like this, mitigate, and then look to target that 1 minute. Excuse me, not 1 minute high, but look to target the 15-minute high like this, the 15-minute high of that minor low and minor high like so, okay? So this is how we're able to trade correctly, okay? So if you don't know structure and if you don't know how to identify structure, I really highly suggest you continue watching this video because it's going to help you and show you a bit more in terms of how to understand structure and how to identify it, okay? So let's go here. I'm going to show you guys another example, the way we also identify structure. It's the same way it's actually the same way we identify structure. It's just that a lot of people have this misconception where when prices are breaking a high like this, right, prices are going bullish, our expectancy is to wait for prices to retrace, right? So if we're expecting the price to come here at the area of demand, right, we would want for prices to retrace like this. But what if we were like, okay, you know, we're on the 5 minute, let's just say we're on the 15 minute, right? What if we don't have the time to wait for, you know, the 15 minute to give us a retracement like this, right? What if we wanted to continue trading sort of on the scalping side of things, right? Like we have a break of structure, right? And we see an area where price is just bullish like this, right? We don't see prices showing us order flow or any sort of structure in the swing like this, right? But we see prices bullish like this. Well, I'm going to show you a little trick in a second here. What I like to do is, if I saw a scenario something like this, right, and prices, the candles are bullish like this, you can see in here, since we don't see it on the 15 minute, but you can see it on the 1 minute, right? You can see here that prices are actually showing some order flow on the 1 minute. So let me show you here. Okay, so in this green box will represent sort of an area where we can see order flow inside on the 1 minute. So the 1 minute would look like something like this, right? You can see the 1 minute highs and lows doing this, just like this, okay? So I'm going to do this green so you guys can see what excuse me, not green. I'm going to do this red arrow so you guys can see and differentiate it from the 15 minute, okay? So the red arrow represents that 1 minute, okay? So sometimes I've been explaining to people that whenever structure is created, there's two types of swings that the market does, okay? I'm going to show it to you right here. And this will help you sort of dissect the whole area, the whole idea behind how the market moves, okay? So when prices are going bullish, okay, this is just one way. Prices do this, okay? Like this. Okay, structure does this, okay? Prices break a new high like this and then fully retrace. Now the reason why is because this extension here is very bullish, okay? It's straight bullish. There's a lot of imbalance in it, right? You can hardly see any sort of retracements, like breaks and retracements, or breaks and mitigations, right? You can't see any order flow in this extension, right? But then there's the other type of extension when prices are doing this. Prices are going high like this, right? Then you see prices sort of showing us vivid order flow that's pushing bullish like this, right? And then prices break, and then prices come in and retrace, right? You've probably seen one of these two, right? Or both, obviously, right? And so the two differences between here is that one isn't showing order flow and structure, but the other one is, okay? Now this doesn't mean that both of them are right or wrong to trade. You can trade them however you like, obviously, right? But when we're typically on the 15 minute, let's just pretend that this structure here, this one right over here with the green, is the 15 minute, right? This is the 15 minute, and this is also the 15 minute, okay? So when the 15 minute is pushing bullish, you can see when we would anticipate that prices should go bearish, completely bearish here on the 15 minute, because prices there, you can probably see an order block there on the when prices retrace fully like this, there will be a vivid order block that you can see here, right? And you can obviously see, and we're going to show you some examples here on the live chart in a few minutes, but when prices extend like this, you can obviously tell that there's so much imbalance here, right? There's barely no order flow. There's no structure in here at all, that we anticipate already the prices should go bearish here on the 15 minute, okay? But however, on this example here, when we see this example, we can see now that the 15 minute is going bullish, bearish, bullish, right? And within this structure here, you can start playing its highs and lows within the 15 minute. You can clearly see the vivid lows and highs, which would be considered our microstructure on the 1 minute, which would be the 1 minute. So this would be 1 minute structure, microstructure pushing bullish, right? Like this. So now you know if and whenever price is breaking new highs, we can always say to ourselves, okay, well, we have a protected low. We have a protected low, right, and a weak high. So whenever price breaks, we always have to understand the theory behind structure, that whenever price breaks, we have a protected low and a protected high, or a protected high and a weak low, right? If price was going to be bearish, something like this, right? So know and understand this concept. when we have a strong high here and a weak low. So theoretically, price should hold the weight, right? When price drops like this, theoretically, prices should hold the weight, should not go past this high, right? Otherwise, if prices do go past this high, then we have a weak high and a strong low, like this, okay? I don't know if I'm making sense here for you guys, but let me just kind of draw a little quick diagram here for you guys. But when prices are going bullish, you can see now we have a strong low and a weak high. Theoretically, prices should retrace and then push bullish, right? That's the theory. And 99%, I keep telling most of my students actually, I keep telling most of my students that 99% of the time when price breaks a high like this, prices will retrace and then you can look for the buy, right? Prices should hold, theoretically. 99% of the time this happens, right? There's that 1% when price doesn't hold like this and drops and you anticipate a buy here, right? And let's just say you bought here without a confirmation entry here, right? If you took a buy here, then that will be that 1% that you lose, right? Theoretically speaking, if you're just buying the lows and the highs of the markets, right? Because theoretically, we all understand that when you're buying and selling, you're buying low and selling high, right? That's the theory behind it, behind trading the markets, right? So the two differences between the two is one is bullish, right? We'd expect for price to go bearish here and then mitigate and then continue bullish like this. And the other type of structure, 15-minute example like this, right? Price is going bullish, right? We're seeing a lot of order flow like this. We're seeing 1 minute vivid order flow. Excuse me, I don't know, I think my camera just froze a little bit here. All right, so theoretically, since every structure breaks, right, theoretically you can trade this, right? What do I mean by this, right? Like I mentioned here, let's go actually on another example here, right? When prices break like this, in theory, prices should be respecting this low and continue bullish. Respecting this low, continuing bullish, just like this, right? But at the same time, now we have what's happening right over here is prices creating liquidity, right? When prices are breaking, mitigating, price creating liquidity for a major move to go to look for buys like this, right? Let's just say this was the 15-minute that was pushing bullish, right? And here you could see that there's the 4-hour that was broken, sort of like this, right? You can see there's the 4-hour low, something like this. Price is going to come and mitigate this and now push bullish, right? So this is what I want you guys to see, is that you can trade everything and anything just as long as you know how prices, how the markets are treating structure, right? Because there's 3 types of structures, right? So I want to go into the live example and show you now how to identify structure correctly and vividly, okay?